Indian equities end the day flat, in line with SEDT global indices. Sensex closes almost unchanged. Nifty ends just shy of the 10,900 mark.
Etihad wants to invest additional equity in Jet Airways at a discounted share price of 150 rupees per share, wants exemption from SEBI's preferential pricing rules, even as bankers meet to finalize the resolution plan for the debt-laden airline. That is a CNBC TV exclusive.
SBI puts Essar steel exposure worth 15,000 crore rupees on the block for sale to an asset reconstruction company or banks. It sets 9,560 crore rupees as the reserve price on a 100% cash basis.
Specialty restaurants rallies 20% and remains locked in upper circuit on stellar third quarter numbers. KPIT Tech, on the other hand, slips over 4% after reporting a top-down miss in the third quarter.
And the rupee continues to be weak. Yields too remain higher after a BJP spokesperson was quoted as saying that the party favours an expansionary economic policy where fiscal deficit targets should not be sacrosanct. Those were the top 5 headlines on a day when Dalal Street saw a lot of up and down, but within a range, and the indices ending flat. So basically a day of much ado about nothing. Well, welcome to Markets Today Talk Back, the show where we will tell you all that happened in those 6 hours of trading in just 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Nair. Hi, Prashant.
Lata, hi. By close, it was absolutely flat. We will talk about that and more over the next 30 minutes. We'll take questions and our experts will answer those questions. Joining us to help us do that are Prakash Devan on fundamentals. Ashwini will take questions as far as technicals are concerned. Gentlemen, thanks very much, both of you, for being with us here. But as we begin to take questions, let's spend 2 minutes before that taking you through what really mattered, what happened, what stocks and sectors moved in today's trading session. Lata.
Well, the global markets also, after a heady day, a heady Tuesday, were kind of relaxed today. And that seemed to be the mood in India as well. 1.3, 1.4% rally yesterday. And today it looked like people were just wanting to, consolidate the gains. There were, of course, some winners and losers. You saw most of them with good results, doing extremely well. Saw the performance of specialty restaurants. And then those that didn't got punished. But at the index level, it all cancelled out. Even big triggers like rupee and bonds. Bond yields actually went up a goodish bit. But you didn't see banks reacting much. They were quite sedate. So it was a day when the markets didn't want to take too many decisions, it looks like, because they have very big events coming in. Results, budget, polls. So at the moment, it looks like they will be ranged and look for direction from these events. But then there are always micro stories, aren't there?
Oh, absolutely, Lata. By the way, the advanced decline was almost evenly matched. On my screen, 822 stocks higher, 860 stocks lower. So absolute equilibrium in that sense as far as advanced decline is concerned. What did poorly was sectors like media, there was FMCG index, the metals space was broadly lower, and what did quite okay was energy, public sector banks and IT. I'm talking about sectoral stuff. Let's come to the Nifty, large caps. So the winners included things like Indiabulls Housing. Yes Bank continues its move up. It's almost 210 rupees now. Wipro was strong. IndusInd Bank, Grasim, BPCL were other stocks which were looking up. On the losing side, you had names like JSW Steel, Bajaj Finance lost on volumes, Bharti, Asian Paints, UPL, Hero MotoCorp were all lower. You come to the broader space the graphite names, Graphite India, HEG, starting to make a move again. Jet sank today, while Indigo was up 5%. And then there was, NIIT Limited, which was up about 4% on very large volumes, and so on and so forth. So, a fair bit of stuff in the broader space which moved. But remember, I began by saying that advanced decline evenly matched. So you had losers as well. As I said, Jet ended almost 8% lower. There was Mindtree, which was down 2.25% lower. Cummins India was down almost 4.5%. Natco Pharma, Eveready finally, after 4 or 5 days of 25% gains, sort of gave back some. It was down about 2.5%, 3%. Lata.
Okay, well, let's ask our guests, where do we go from here? To you, Ashwini. Your assessment, was it a disappointing session for the bulls, you would say?
Well, unless you have big news flow which is driving the market up every day. Often after large range trading days, you will find the market consolidating. So very, very narrow range. I think you would say that just some consolidation sideways move. Now if this continues and we don't break out on the upside, then probably there could be some trouble. But given that you have important results tomorrow, chances are we could break out on the upside. The problem remains in the bank nifty, because that is where in the morning things were looking much better, and that gave up by the end of the day. So my sense is still an upside, but you don't want the nifty to break 10,850 thereabouts, and possibly we need some global help plus some local good news to get over these important resistances. But what you can say is that 10,950, the supply out there is probably reducing. Otherwise, you would have had a bigger downside from those levels.
Okay, Ashwini, thanks very much for that. We move on to the second story of the day. Abu Dhabi-based Etihad Jet Airways, his partner, has made a conditional offer to pick up stake in Jet Airways, pump more money into the company. But, and this is a big but, they only want to buy stake at a share price of 150 rupees each. It has set tough terms for the deal. Jet slipped over 8% in trade. Remember, it saw that big move over the past 2 days. Indigo and SpiceJet, on the other hand, have ended the day in the green. Indigo, as I said earlier, is up 5%. Lata got us that story earlier. Lata, I mean, this is absolutely tough as nails negotiating.
Oh, yes. I mean, I can understand from where Etihad is coming. They also have fragile financial position. But basically, the conditions that Etihad has put on the table is that they will bring their fresh money, but not at current jet ruling price, but at a much lower price of 150. Current ruling price is about 275. And it never went to 150 in the entire SEBI pricing formula period of last 6 months. As well, they want exemption from SEBI, therefore, from its preferential pricing rules. It also wants Naresh Goyal and its related parties to be whittled down to 22%, at the most 2 seats on the board. Maybe one of them should be occupied by the lenders who would convert part of their debt to equity. As well, they should not be in a position to act on behalf of the company, even if Naresh Goyal were, say, chairman emeritus. That role should be very clearly defined. They also point out that maybe Jet needs money very quickly, and more money than the resolution plan is talking about. They are willing to begin 35 million right away, provided all their conditions are met. But they believe that the immediate requirement also is more. They don't expect their own bankers to be able to provide much, and they will definitely not use pledged shares or any of their own mechanisms to induce their bankers to put in more money. So basically, it falls on the lap of the Indian lenders. Lenders really have a tough choice. I mean, people who know that the company is in a bad spot will obviously drive a hard bargain. Absolutely.
We've got a question coming in. Adir Gupta from West Bengal has written in with a question on Jet. He's been holding 1,008 shares of Jet. His cost is 576 rupees a share. Stock closed at 271 today. He's a long-term investor, wants to know if he should continue to hold or sell. Prakash, what would you tell Adir?
This is really one of the toughest calls in recent times, Prashant. But I really don't expect the price to follow any sort of a upward trajectory given the kind of tough conditions that the company is currently into. And all these negotiations, as very rightly Lata pointed out, could only indicate that the negotiation could only get the price to be lower. And that's exactly what happened when the Tatas came into the picture. So for him, he will have to take that tough call of booking losses and moving maybe into Indigo if he wants to ride the curve on the same sector. But at least he'll have to move out of Jet, because I don't see any respite, at least not all the way back to 560 or 570 or wherever he's bought into.
Okay. All right. Let's get a technical view. Ashwini?
Well, he got great opportunities to get out. See, you have to understand what are you dealing with. A, it's a difficult business. B, now you are under a mountain of debt, and nobody is going to give you those 1,500 rupee valuations. I think people in India understand business. If somebody is in trouble, you offer him half the price of what you think it's worth. So, you have to get out till the price is, maybe above 200. It's a no-hoper.
Oh, okay. There you are. Yes, it's a difficult story at this point in time. Well, very brave hearts would be able to buy on dips and average down, but that requires a lot of staying power. The third headline, SBI is all set to get rid of its exposure to Essar Steel. The lender has put its entire exposure worth 15,500 odd crore rupees on the block for sale to an asset reconstruction company or to banks, depending on who wants to buy. The bank ended the day 0.5% in the green. Ritu is here with the backdrop as well. Ritu, sudden decision, you would say?
Absolutely, Lata. This is a big surprise. The State Bank of India at this stage of the resolution process, where an offer from ArcelorMittal is on the table, the NCLT is hearing the plea. The next hearing is actually slated for the 31st of January, and at this stage, after waiting for over a year for this resolution to start, is now looking to offload that entire 15,400 crore rupees of loans, and at a 38% haircut. Remember that the reserve price is set at 9,500 odd crore rupees, which entails a 38% haircut as compared to what ArcelorMittal would have offered, where SBI would have recovered over 11,000 crore rupees, which means a haircut of less than 26%. Clearly, this arbitrage that they're offering is because of the time value of money and the money that the banks are losing every day in litigations day after day as this case is getting delayed. They had even moved the higher court expediting the case, but so far, it is been going at a slow pace. The next hearing is at the end of the month. The e-auction for this will be conducted on the 30th after EOIs are submitted on the 18th of this month. But, there is a big caveat also that has been put in this bid document that we have reviewed, is that if there is a resolution for Essar Steel before 1 year, then there has to be a clawback option available, which means the buyer would have to offer more than what they have bid for in case the recovery happens sooner than expected. But yes, it does come as a surprise, clearly indicating that bankers are fed up, the kind of delays that they're facing with a lot of these large cases in the bankruptcy courts.
Okay, thank you very much for that, Ritu. Well, it does give a feeling that, for all you know, the Ruyas may stay back if the loan is bought by ARCs and they are able to purchase it from them outside the NCLT process. SBI, from SBI, it makes sense. If they're going to get a 26% haircut from Arcelor, and this is the reserve price is 38, maybe they will get someone for 30%, and that discount will come immediately. So it makes sense from an SBI angle. Perhaps we will have to wait and see, though, who buys this loan and at what haircut. But there is someone who has SBI shares. Hanam Reddy has written to us from Bangalore with this question. He has been holding 103 shares of the bank, purchased at rupees 265, says he's a long-term investor, wants to know if he should hold or sell. Prakash?
No, I think it's a clear hold. Notwithstanding this particular move on Essar as an asset to which they're liquidating, even otherwise, when we talk so positively on the corporate-facing banks, Lata, there is no reason why SBI, having done its fair share of consolidation and a cleanup in its books, will not be able to participate in this growth story going forward. So I'm quite positive. Amongst private sector, I think if there is anything that you need to pick confidently, it is SBI. So just hold on. 260 is not something that you bought maybe too long back, and then you could probably look at levels of 335, 340 in the days to come. Which is where you could probably book profits if you are not too long-term an investor, but otherwise you could hold on and definitely be comfortable.
Fair enough. Ashwini, State Bank of India?
Yeah, on SBI, you can possibly look at targets about 330, 335. That's where historically it's kind of petered out. So now that you are getting some upside, use that opportunity to take profits off, because SBI for many years, even when it was doing well, was unable to cross 330, 335. You don't want to get stuck in something like this, because nothing is forever in SBI or PSU banks. You may tomorrow get back into trouble again, and then you lose your profits. So in the next 35, 40 bucks, you should plan on getting out of SBI.
back, absolutely flat close for the day on the Nifty. Advanced decline evenly matched, and the market off the highs by close by quite a bit. We got through 3 of the top 5 stories. Here's the 4th one. Specialty restaurants was the stock which rallied 20%. It actually was locked up in upper circuit. The third quarter results from the company were stellar. Profits rose almost 700% on a yearly basis. This, along with a big up move on the margins and revenue front, bode well for the stock. We spoke with Anjan Chatterjee, CMD of the company, to know more about the quarter which went by. Listen in.
Delivery has been 50%, almost 48% jump on deliveries. We got a vertical of deliveries. The wet-led ones will be having around a percentage of around, I think, 18%. 14 to 18%, which is growing. In the next year, we're going to be pressing the button to look at opportunities to scale up Hoppy Pola and also add another brand to the vertical of wet-led. So they are going to be parallel verticals, so you can't ignore the millennial today. So you will have to go balance-wise. And I think that these are the 2 things which the son hopefully will be leading, the young team, and the father continues to sell mainly in China Chinese.
Okay. Well, most stocks that were in news. KPIT Technologies slipped over 4% after reporting a top-down miss in its third quarter numbers. The stock, however, saw some buying in late trade to end the day just about 2% actually in the green. Net profit had declined 26% quarter-on-quarter, coming in at 65 crore rupees. Revenue and margins too missed street expectations, but the management said they maintained the FY19 guidance on revenue and on margins. Listen.
We'll continue to grow, in a reasonable space. While we have grown 30%, we expect the growth to be more than 20-25%. That's what we have said over the next few years. So that growth momentum in engineering will continue to be there. On the margin front, we will see uptake in a quarter or 2 from there. And so I think the growth trajectory in engineering is going to be there, plus the margins will improve.
Vikrant Naik from Odisha has written us with a question on KPIT Tech. He wants to know the right time to buy 50 shares of the company. So let's take it to Ashwini first. Ashwini, KPIT, he wants to buy 50 shares, wants to know whether this is the right time. What would you say?
I mean, it's not the best mid-cap IT stock. So, if you have to do something, why not do it in an NIT Tech or, something which is a bit more pedigreed, say Tata Elxsi or Mindtree. If I were him, I would think, staying with large cap is a much better idea. We know historically, how mid-cap IT collapses all of a sudden, and then you are stuck at higher levels. Sometimes it's a forex issue, sometimes it's, one deal win going here or there. I think large cap IT is much better, and they've all bottomed out and now slowly moving up.
Okay, well, KPIT Technologies, let's just keep that chart going. Prakash, you have a view?
No, I kind of agree with what Ashwini's view is. It's not one of the best names to get into at this point in time, for sure. Large cap IT would be much better if he has to play the IT sector as a whole. Especially
considering the way Infosys has roared back, I suppose. Okay, now to the last headline. The rupee continued to remain weak today. Yields too, that is bond yields, also remained higher, which means bond prices remained lower. And this happened especially after a BJP spokesperson was quoted as saying that the party favors an expansionary Indian economic policy where fiscal deficit targets should not be sacrosanct. Because of the weak rupee, you saw tech stocks rallying, and Wipro and Infosys led those gains highest among the tech stocks. Prakash, I won't ask you tech stocks again. Let me ask you about NBFCs. Today, the yields, actually, 10-year bond yields went towards 7.5. I mean, that makes life a little difficult for NBFCs. But is there anything in that pack that you will want to buy?
No, not yet for sure, Lata. In fact, what I'm expecting is by the time December quarter numbers are out, earnings for most of the NBFCs, particularly HFCs and the ones that have some real estate exposure, we could see some ugly truth facing us again, because the quarter has been difficult. Things have eased out, but they're still not out of the woods. The rates are not interesting at all. So I would stay away from for the moment. If I were to buy something with a rural spend in mind and some kind of a growth that could come through, it would be Mahindra Financial Services at best, but nothing at this point in time from the large NBFC, HFC area.
Fair point. Okay, Prakash, with that we go over to another important story that we have been tracking actually from earlier this week, the extent of defaults in the Mudra loans, or the loans given to MSMEs and small companies. The management of Syndicate Bank told CNBC TV 18 that 14 to 16% of their exposure to Mudra loans have turned NPAs. Incidentally, Union Bank's sources told us that their exposure to Mudra loans were maybe slightly better. The NPAs there stand at 7%. This comes after reports emerged that the Reserve Bank had flagged that bad loans under the Pradhan Mantri Mudra Yojana scheme have risen. We caught up with the banker, the managing director of Syndicate Bank, Mrityunjay Mahopatra. Hear him out on this issue.
We have made the normal provisioning wherever the accounts are not paying as per the term. We are making the regular provisioning, and the NPA is in the same zone as MSME, which is between 14 to 16%. So we have made first year provisioning, which is 15%, but we have not seen any kind of excess NPA trends as yet.
Okay, so that is the management of Syndicate Bank there. Prakash, Ashwini, thank you very much for being with us here on this edition of Markets Today.